Okay, I think I've actually been talking to myself here. Let's try it again here. Welcome again to the How to October Crash Proof Your Portfolio. You should be able to hear me now, hopefully. And what we're going to do is we're going to take a look at some history here of the month of October in the stock market, going back for 60 plus years, and then we're going to go back as far as 90 years, taking a look at some of the characteristics of October and whether the October crash month is fact or fiction, but also taking it seriously and looking at some characteristics of October. And I'm going to present a very simple strategy here. It's so simple that it's really one of those things where it's almost common sense, but people don't do it for whatever strange reason, or haven't thought to do it, I should say, in the past. But I think it's something absolutely worth considering this go around. So let's go ahead and kick things off. This is recorded, so if you have to step away early or would like to watch it again, this will be available on recording here over the next couple of days. Okay, excuse me. Let's go ahead and kick things off here. Again, welcome to How to October Crash Proof Your Portfolio. For those of you not familiar with who I am, I've basically spent about 20 years of my career in the hedge fund industry, developing quantitative financial models and developing indicators. And we have navigated through some crash or some tough Octobers in the past, and had a really good 2008 when the majority of funds out there struggled. So actually, a little bit of an irony, the best month we've had in recent years in the hedge fund was October of 2008. So we were short all the markets and were able to capitalize on a lot of the markets falling apart during that month. So let's talk about October and get ready from that front. I've also authored a book called Dynamic Trading Indicators, which focuses on the value charts technology, which I developed as an engineering student in college, and have been a speaker at various national and international Bloomberg events as well. Now, I always like to start off with the risk disclaimer, and this basically has to do with trading or investing carrying a high level of risk. It is not suitable for all persons. Before deciding to trade or invest, you should carefully consider your investment objectives, level of experience, and ability to tolerate risk. So very important to understand that. Do not trade or invest with money that you cannot afford to lose. Now, we're not going to talk about simulated track record tonight, but I always like to point this out as well. Hypothetical or simulated performance results have certain limitations. Unlike actual performance records, they do not represent actual trading. So past performance is not necessarily indicative of future results. Let's go ahead and dive right in. Now, for those of you who have seen my webinars in the past, one thing I like to do, just to keep things on a lighter note, if you enjoy dining out at different restaurants around the United States or the world, we just had our team down here this past week, and I took the team to a favorite down here in Austin, Texas called the Salt Lick Barbecue restaurant. It has a lot of character. It's really interesting. It's kind of a funny deal, but if you go to the Salt Lick restaurant, it's actually cash only, and you have to bring your own beer. So you have to go and buy your beer somewhere else and bring it to the restaurant. So it's kind of old-fashioned in its traditions, but it has a lot of good meat, and they do have an all-you-can-eat meal that will be guaranteed to fill you up regardless of your appetite. So kind of fun to check that out. Yeah, Rich, you've been here. You've checked out the Salt Lick, so you know exactly what I'm talking about. All right, so let's dive right in. October crashes, part myth and part reality. Now, admittedly, we've all seen a lot of the advertisements out there that are capitalizing on fear, doom, and gloom. I am not one of those people who subscribes to that. The goal of this webinar is not to instill fear. It's just to simply talk about what the possibilities are in the market and simply prepare ourselves for navigating a potential crash scenario, which can and does happen over time, and to look at the truth behind the Octobers over the years and what can happen, and then look at some of the characteristics on weekly charts, and then look at the most recent momentum characteristics of the stock market and what that's telling us. And then last but not least, we'll talk about the very simple October sidestep strategy. So if you have a lot of your portfolio in stocks, then the October sidestep strategy could be something you may want to consider. All right, so excuse me. If you analyzed the stock market Octobers, if you will, going back to 1950, this is really what it looks like. So you'll notice that only 2 Octobers since 1950, again, this is the S&P 500, 2 of them are actually below 10%. Interestingly enough, right? So we have 1987 down 21%, and we also have 2008. Both of them, 87 was a while back, but it sticks in our memory. And it's funny, one of the guys I worked with in the hedge fund space, his first day on the job after school was October. It was a crash in October of 1987. That's an absolutely first day on the job. So imagine that. That's a pretty interesting timing there. But you'll see that what's interesting here is we have another 2 months, another 2 Octobers in 78 and 79 that were below 5%. But in general, October has been a fairly decent month. So you're talking about literally going back to 1950 in this study, 4 Octobers out of 60 plus years being below 5%. So from that perspective, it's not, there's been a little bit of a an exaggeration, I think, of the danger year in and year out that October represents. But it's important to understand that it can happen. And the reason why we're having this class right now is because there are some interesting things happening with momentum in the stock market. So it's one of those things where I'll show you another thing that I looked at in the charts as well, that it's interesting. So we just want to make sure that if October's down, or God forbid if it does have a crash, we are prepared for that. So notice the majority of the down October months since 1950 are really 4% or less. And excuse me, the majority of them, if you look at, I'd say maybe half of the Octobers are actually less than 2% on the downside. So let's look at the upside that October's experienced since 1950, and you'll see that there's been, a number of months that have been fairly good in October. So you'll see a total of 3 months that were north of 10% on the positive side, and you'll see call it 4 more months that are maybe even 6 months here that are north of 5% to the upside, and then obviously a lot of months that are 2 to 4%. So the majority, the half of them. So this gives us a little bit of an idea of what October's done. Let's take a look at another visual here. If you go back to 1900, I actually have been crunching numbers and got the Dow Jones go back to literally 1899. And I was curious to find out what the average was for each calendar month. So interestingly enough, I would not have guessed, but September actually registers the worst. Now, I have not, for those of you who are hardcore statisticians, I have not, checked my numbers intensively. I'm pretty sure they're right. I've double-checked my calculations, one time, but I was surprised to find that September, throughout the last 110 years, had been registering the worst month there. Now, what's interesting is October actually has been marginally up, 0.2%, and that includes the crashes that happened in 29, 87, and 2008. And then traditionally, the fourth quarter has been a fairly strong quarter. And then we also have the second quarter, really the March-April timeframe has not been too terribly bad either. So for even the first 4 months of the year have not been terribly bad either. So let's go ahead and look at something a little more recently. If you look at 1980 to present on what the average calendar month does here, you'll see that really August and September are the two culprits here that tend to misbehave more than October. Now, as a side note, we are actually having thunderstorms down here in Austin. We don't even know what that is. It hardly ever rains down here. But if for some reason I disappear, it's possible that my power will fail. So hopefully not. But if I do disappear, you'll know what happened. Let's go ahead and take a look at some questions here. How many Octobers were positive? I'm going to show you that in a second, Wayne, so hold on to that. Okay, to say it is characteristic of October, you have to compare it to all the other months. Yeah, so Rodney, you're right. So Rodney, you're more of a statistician probably and technician than most people, but this gives you an idea of 1980 to present what the different calendar months do on average. So you can see the fourth quarter in general is actually a very strong quarter, so historically. So this is something that is interesting to note, but the best month of the year historically has been, since 1980, has been April. So that's interesting as well. Now, let's look at 2000 to present. The statistics here are similar, and what's interesting is since 2000, October has actually been the best month in the fourth quarter. So still April, very strong. September, somewhat misbehaving there as well. August, flat. May, slightly down. This gives you a little bit of a picture of what these months have done. Now, what we're talking about here doesn't necessarily... okay, my chart should be updating, Kurt. If you aren't seeing my charts, can everybody see the 2000 to present here? Okay, good. Okay, thank you. So yeah, we should be good here. If you can't see it, you may want to log out and log back in, but you should be able to see 2000 to present histogram here. Let me throw up the next one, because this compares the 1900 to present with a blue histogram, 1980 to present, and then 2000 to present. So you can see, you know, there's a little bit of trend of fourth quarter being a good quarter, typically year in and year out, and April being fairly strong over all the time frames, and then October, interestingly enough, has actually gotten stronger in the past couple of years. So now this is interesting. You know, I wanted to dispel the thought that October is always doom and gloom. All right, I think that the media plays it up. Some educators try to sell a fear. I'm not one of them, so nothing to be afraid of, in my opinion, in October. But I did see some things in the chart that made me think that, you know, just in case that rarity comes up and we do see a nasty October, what can we do to get ourselves ready for that? So here are the statistics since 1950. And you'll see that total number of months that I measured were 64 years. Number of up Octobers, 39. Number of down Octobers was 25. And that's roughly 60% of the time you can expect an up October, and about 40% of the time you can expect a down October. The average October performance during that period was up 0.82%, and that includes the crashes. So that, you know, that's, you know, fairly decent. Especially if you factor in the crash of 87 and 2008. Standard deviation was 5.57. Now, these lower numbers is going to be meaningless to a lot of you folks who stayed as far away from the math building as you could in college. But the idea here is that the majority of Octobers are going to fall between negative 4.75% and plus 6.38%, approximately 68% of Octobers are going to fall in that range. And then if you go down here to plus 11.95 or plus 12 to minus 10, really 98% of October is going to fall in that range right there. Okay, so that's what that means for those of you who are interested in learning about that. Let's take a look at some charts now, and through monthly analysis. I actually created a tool that I call October bars, and what it does is it actually goes in and colors October red. And whenever we analyze things, it's really helpful and important to take a look at you know, what we're looking at, try to describe it or have it plotted somehow to make it stand out. And October bars does that for us. Let me just make sure there's no questions here. Number of crashes. Yeah, Linda pointed out there's a number of crashes going back in September. Yeah, that's true. It's interesting. It's not really thought of like that in the mainstream, but it is true. April related to tax day. Yeah, Rodney, I don't know. It's a good question. It could be. Yeah. Linda, okay, have you looked up the number of major corrections in September and October combined? I have not. Just focusing on October right now, but yeah, it's interesting. There's that time of the year, the August, September, October time frame that you know, that would warrant some further study. No doubt about that. Okay, but let's look at the October bar. So if you see my slide up here, everybody should see. Excuse me. Everybody should see the Dow Jones Industrial Average going back. This is starting in 1925, and you'll see these red bars here. These are Octobers. This is a monthly chart here, and you can kind of see what's happened, you know, over time with October. So this gives you a little bit of an idea going way back in time. Now, there's a perception out there that that anything beyond a couple of years back with charts is not applicable or not helpful. Now, I don't necessarily agree with that. I do think the markets have changed with the, computers and the different algorithms that are now out there, high frequency traders. However, there are still some larger characteristics that have to do with greed and fear and human emotions that continue to this day, and I think that October crashes or market crashes is certainly one of them. Okay, so here's a crash of October of 1929, and that may be how October got a stigma, of being that that difficult month here. Now, what's interesting here is if you look at 1929 on the monthly chart, you can see a lower momentum reading here. So the top, we'll say point number 1 right here, and then point number 2 is the ultimate high, and there's a bearish divergence. So we had higher prices, and then we had lower momentum on both the indicator line, and also notice the histogram was much lower as well. So that did put in a bearish divergence, and then we broke the low of September, broke the low of August and July, and then got hammered obviously in a crash there. And then the ensuing months, about 6 months or so, corrected, and then you had the Great Depression, a decline here down into really 1932. So this gives you a little bit of an idea of what that looks like. I'm going to advance the slides here slowly so you can see, going back in time, what some of the October periods look like. Again here, a lot of them are just non-issue, slightly down here, and 33, 34 is slightly up. We have up in 35, up in 36, and then a continuation of September here in 1937 where October got hammered, and then we have up, down, I should say, in 41. But this gives you a little bit of an idea of how they behaved in the past. Really nothing noteworthy, in my opinion, with October all the way through the early 50s. So just not a lot, normal activity, I'd say, even through the late 50s, 1960. Everybody should be able to see me advance the slides here. But the red bars, these are monthly bars again, are representing the actual month of October and what it did during those time frames. And again, all the way even through the late 50s, early 60s, late 60s, and now we're getting into early 70s. So in 70s started to change, which is interesting. It was a more of a bear market environment. You saw a few in 78, a fairly sizable down Octobers, 78 and 79, and then you had the inception of the bull market in the early 80s. And then during our recent history here, for those of you who are trading or in the markets back in 87, glaring crash of 87 back there, and then we go straight until the 90s. And really, it's interesting, in 97, we had a little bit of a scare, and I remember that in the hedge fund world. We got hammered in October here, but it was kind of a false scenario, didn't have any follow through, and then a very strong up month here in 98. Now, let me tell you what's interesting. Now, I have not crunched the numbers here, so it's almost irresponsible of me to bring this up. But one thing that's interesting here is that it seems like when you have a down August, sometimes it spells an up October. So sometimes I see these large down August months, and sometimes I see a follow through of an up October. And then when I see that's not always the formula there. But what's interesting here, I'm going to go back one slide to the 87 crash. Let me clean up my my ink. And when you see an up August here, all the crashes, and this is so little data that it's irresponsible almost to even talk about. We had a positive August here in 87. You had a positive August in 1929, and we had a positive August in 2008, and we have a positive August this year. Again, it's just one of those little things I noticed. It's not, we have so little data on that, you can't really rely on that per se, but it's interesting. Here's the 2008 sell-off here, we all remember, not too long ago, and we had a slightly positive August here before that. And sometimes I notice when you have a really strong down August or down September, you get that snapback in the October timeframe. Not always, but sometimes. So let's fast forward to where we are today on the monthly chart, and you'll see that we just had a strong August as well, and that brings us up to date. So we've had some strong Octobers. We had, obviously, the 2008 was down considerably. Most of the Octobers in recent time have really been non-events, if you will. Now, remember, 60% of Octobers we expect to be positive and 40% to be negative. So if you look in recent history, the last 75%, if you will, have been positive. So going back to 2010, 2011, 2012 was negative, 2013 was positive. So from a statistical standpoint, you wonder if we're due for that down October here. Again, small. This is kind of a small observation, but we've had a lot of positive Octobers here in recent history, and that again, from a statistical standpoint, seems like we're going to expect around 40% of Octobers to be negative. So let's go ahead and jump into our weekly analysis, and we can pull up a chart here in a minute. I'm just trying to go through this data, and we'll take some questions here at the end if you don't mind. But I use the October bars again on the weekly basis just to show you what's interesting here. So this makes the October trading really jump off the map here, or off the chart. So what's interesting here is this is an up October right here, and we have new highs, new highs, new highs, new highs. So none of the lows of the October weekly bars were broken during the month of October. Interesting. Now what's interesting also is some of the crash months of October, you have a possibly one down month, and then you have that secondary month correction, and then if the low of that second week, I'm sorry, these are months, these are weeks. The first week is maybe possibly a down week. Second week could be a corrective or up week. If you see the low of the second week broken, that could be a huge red flag. Okay, and that's what you see in the 29 crash, and I think that actually happened in 87 as well. But it happened in a couple of them where Octobers ended up being fairly nasty, and if you broke the low of the first and especially the second week, kind of a 1 week look back period, you could be looking at the market coming under some pressure there. All right, so let's go ahead and fast forward here. Again, now this dispels this. This third week of trading October broke the low of the first two and went nowhere. So that you could see that happen. What's interesting here, though, is if you go on to 1951, again, it has that second higher low in the second week. The third week breaks the low of the second week, and then you have a fairly strong down move. So these are the little things that we can notice here that could give us a little bit of an edge or some clues about possibly how to trade or how to exit, how to protect ourselves. Again, interesting scenario if you fast forward to 1978. So remember, we talked about that first, the lowest low of the first week, and then we have a higher low of the second week right there. And once that's broken, in fact, let me change my colors here so they actually will stand out here. Just 1 second. I'll use a light blue here. So the second low right there, okay, I'm drawing an arrow. Second week low, this is a second red bar in October of 1978. Once that was broken, then you can see that it came under a lot of pressure there and sold off. Now what's interesting is the other down Octobers, including 77 and 79, and I believe 2008, they just broke the low of the first week and never looked back. Okay, so it's interesting how that could be a trigger mechanism as well. So that broke, again, the low of the first week, just sold off a pretty good amount. And then if we look at the low of the first week of 1979 here, same thing happened. Broke the low of the first week and then started to really head south here. All right, now going to 1987. All right, yeah, this is the same thing. I was just going from memory here. This broke the low of the first week right here and took off the downside, as we can see, for 87. So what's interesting here also in 87, and this is probably even more evident on a daily chart, but you'll see we have this initial top right here, and then we have a secondary top right there. So from a momentum perspective, you have top number 1 right here, and then just a small inflection for top number 2 right here. Much weaker momentum on the weeklies here, and then you can see you had a downside inflection point on your momentum histogram as well, and that really took off the downside. We really want to keep an eye on that weakening weekly momentum. and that's part of the picture that's actually forming right now. So yeah, circuit breakers. It'll be interesting to see what those do and how much those are going to be helpful, nowadays as well. But that's true. They've tried to implement some things to help here. Now, here's what's interesting. Going forward to 2008, again, that's a situation where we broke the low of the first week. So, and it just took off and really suffered the majority of the damage in the second week here, and then had a little bit of a bounce back before the end of the month. But you can see how that was breaking new lows, and you can see also the weekly momentum picture. Let's point to this top right here. This is number 1, and then you can see a lower momentum line here, indicator line at point number 2. That this lower high here, and then things really picked up in the month of October, broke the low of the first week, and headed south. So what's interesting here, just from what I gathered from analyzing the charts, is if you see a break of the low of the first week, that is that should be a little bit of a red flag. So watch for that. You can see over here that we had a higher momentum picture over here going in this October. So the ultimate low right here I'll put as A here, and then I'll put B right here as kind of a corrective low, and then C. So you can see how my momentum line on a weekly is actually getting stronger here. And the lows, of the first, second, third, and fourth week are really climbing here, and then you finally have a correction. So this is the type of action that we're not necessarily as concerned about when comparing it to, breaking the low of the first week and then slowing momentum, or weakening momentum coming into the month of October. So if you look at the weekly chart right now, and I'm looking at the Dow Jones, what's interesting here to me is that, excuse me, what's interesting here is that you see the momentum picture has been kind of declining here for really a long time, right? And especially now we have, if you have the high here, point number 1, then we're at point number 2, which is almost higher, almost a bearish divergence here. But you'll see point number 1 on my momentum and point number 2, and it's actually weakening. So that right now, as of today, could be a little bit of a red flag. But what I challenge you to do is, and here let's look at let's actually look at 2013, because that broke the low here, right? And that sold off. So people were watching that. You see how much it sold off. It had a fairly large tail here on the second week of October. And it did have the declining momentum characteristics here, all right? But strong buying. Now, here's a huge clue right here. Always look at your charts. Look at what's surrounding, your price action. So if you look at the low from the summer months, I think this is really the August-September low here, you can see that we barely eclipsed that in October. So we had that second week sell-off, right, which should have been a red flag right there because we had declining momentum. But we broke the low, the previous low, the weekly low, that was from, call it early September, and it reversed immediately. So when you see that, it cleared out all the stops, and instead of picking up steam right there at that support level after it broke it, it immediately turned around and retraced. So that's the type of thing you want to watch for, and that's a huge red flag for the bears. So that shows a lot of strength in the market, rallied right back up, and then ended up being a very positive, very nice October. So all those little clues that we're going to be watching throughout the month of October are the things that you want to watch for here. If it breaks, if this market's weak and we start to see a crash scenario, you're going to see acceleration through support levels. If it breaks it, it's going to accelerate down. It's not going to do this. It's not going to break it and all of a sudden find strong buying to push it right back up. So watch for things like that. Okay, let's keep on going here. Excuse me. Let's take a few questions. Momentum is declining, but so is volatility. Yeah, interesting. Volatility is declining as well. And for those of you, I sometimes talk to some big hedge fund managers, and they, their commentary would be that. Excuse me. Just let me grab a glass of water here. Okay, their commentary would be that we've had a fairly anemic bull market from a volume standpoint compared to history. So their analysis is that the current bull market is somewhat, it's been legitimate, but it's somewhat exaggerated in their minds as well from government, help and the policies that are maybe helpful now but hurtful later. So The reason why I was motivated to do this class tonight was just that the momentum picture, and like Rodney pointed out, the volatility picture as well, just really declining. It's a very interesting scenario going here into October. So we want to watch and see what happens here in September, but certainly if we go to new highs here on the Dow or the indices, let's watch what happens when they go to new highs and how they're behaving. And then as you watch your weekly charts in all the indices, you want to see if we get that break of the first week. So if it breaks the first week or the second week low, then that's something that you really want to watch carefully. Okay. Now, again, going back in time right here in 2012, we broke the low of the first week, and it sold off modestly. So it didn't get that really powerful, strong acceleration on the downside, but was a lower sell-off as well. But just watch for little clues like that, because that will tell us a lot about how strong or how weak the market is. Okay. Let's see here. All right. So let's go to the next slide and look at some daily analysis as well. I wanted to put up there some what the dailies look like in certain years. So this is 1929 here in the dailies, and this to me is reminiscent of 87 as well. And the reason why is because you see the slowing momentum, kind of a lower high here. You've got the highest high up here, and then you have that momentum picture just looking miserable and falling off here. And then you have that lower high here, and then you have, obviously, the market just getting crushed. So watch for those types of things. Watch for the breaking of new lows, both on daily and weekly, and then just be careful. And I'll tell you what I recommend doing for long-term investments here in a second for those of you who want to just protect yourself against a potential misbehaving October. Again, this is going to, let's see here. This is 1987, if I'm not mistaken. Let's see here. I should have that. Yeah. And this would take us, again, to that lower high I was talking about. Similar to 29, you have your ultimate high up here, and then you have, the falling momentum picture as well. So weakening momentum, and then you have a lower high up here, and then you have your, your eventual sell-off here in the month of October. So this is what you want to watch out for. Now, for those of you who are traders, let me give you one strong word of warning, okay? There was a guy, when I worked on the floor of the Chicago Board of Trade in the bonds pit, there was a guy who traded the MMI, which is Major Market Index, which was, it was a popular futures contract many years ago, but it was huge. It's a very large contract, and he actually traded his own account, and then he decided to go on vacation. As luck would have it, in the first, I think he left the first week of October, 87. And he actually he was not flat in his account. He was actually long one contract, and he had no idea that he was long that contract. All right, so my word of warning to you traders who trade the stock indices and the bonds or anything else, it's better now than it used to be. But if you have an out trade, if you have an additional contract that's a one lot that's been lost or something, that's on you. All right, the brokerage houses are not going to eat that. They're going to hand it right back to you. So if you have you're long a one lot and you forgot about it and didn't register. Now again, that today with electronic trading, that's just almost unheard of. But I can tell you, just in recent history with the hedge fund, we used to have missing trades all the time. So it was not that uncommon. Just make sure that you're sure that your book is balanced. If you decide to go on vacation in the month of October, you don't even want to risk being long accidentally any contract. All right, you don't even want to be short any contract. You want to make sure that you're completely flat. Again, it's almost not worth saying because everything's managed electronically these days, but just something to point out. And again, the October bars here to show us the characteristic of a sell-off. Let's fast forward to 2008. And you see the same thing here, kind of a little bit of aggressive sell-off. The bad news seemed to come in the first 2 weeks of October, and then you had extreme volatility, and the market really started to bounce back here in the latter 2 weeks there. So what is the October sidestep strategy? All right, this is so simple, and it reminds me, I'm a guy who enjoys reading the Bible and enjoy the Bible stories, but one of them is about a guy who had leprosy, and he went to the prophet and said, how do I get healed of that? And the prophet said, go down to the river and wash 7 times. And the man who had leprosy went away angry because he said, that's ridiculous. I came all the way here and brought you gold, and you tell me to go down the river and wash 7 times. Well, it ended up that's the way that God chose to heal him in the story in the Old Testament. But the reason why I bring that up is because sometimes very effective strategies are very, very simple. Okay, and so what I'm presenting today as a simple October sidestep strategy is very, very simple. If you've had a nice run up in your stock portfolio, okay, and you don't want to mess with October, you're happy where you're at, you don't want to put yourself at risk, then what I would recommend doing, and again, there's a couple things you need to do here. So I would move out of stocks, move out of your mutual funds, and move to cash September 30th. Okay, or you could do one of two things. If you want to, you can wait for the break of the first week's low of October, because every single crash that's happened, assuming that it doesn't hit hard in the first week, again, we're talking about something that's not likely but could happen. So we looked at the odds earlier. The odds are not great historically, but with the declining momentum on a weekly basis, that concerns me. And so I would recommend, for those of you who don't want to play games, you don't want to risk it, move your portfolio around, all right, and move it to cash, all right, and just or safe havens, if you will, all right, outside of ETFs, outside of your stocks. Now, I have many of you out there say, Mark, this was my mom's stock, and it has sentimental value to it. There's other strategies. If you have stock positions that you don't want to sell because it's important to you, you can turn around, buy it right back. All right, so here's the sidestep strategy. Again, very simple, very effective. Close your positions out, move to cash, and I'm going to make a comment on the tax ramifications of that in a second here. And then October 31 comes around, you can come right back in and move from the cash right back into your same stock position. That way you're not risking it, all right? Now, if we didn't see some of the warning signs, we wouldn't even worry about it right now. And I can't advise whether this is the right move for you. All right, I'm just showing you one possible strategy. You've got to be the one to advise or decide if this is actually appropriate for your situation. Okay, now the one comment I'll make on the first comment, moving to cash, be sure to check with your tax accountant for tax advice. If you're in a non-qualified account and you're risking long-term capital gains trigger, make sure you understand, the ins and the outs of that. All right, and I'm going to go into that more in a bit here, what my understanding of all that is, and how you can learn that. But make sure you understand, I am not offering you tax advice, okay? And that our tax system is a mess. So now it's fairly straightforward what the ramifications are to trigger capital gains, but make sure you understand, if you last I checked, okay, again, these codes are changing very rapidly here, and I don't want to pretend for a second that I'm a tax expert or can offer you tax advice that you should rely on. I cannot do that. So talk to your tax advisor. But last time I checked, you had a certain number of days that you could reassume or reestablish a position in the market, okay, to avoid the long-term capital gains trigger. All right, and there's other things we can do as well if that's not an option. You say, no, it's not an option for me to sell out of this position. I'm long stocks. I'll tell you how you can learn other strategies here in a minute. Now, number 2, let's say that the crash or we get hammered in October. All right, again, not likely, but possible. If we get hammered in October and you use the sidestep strategy here and you got out, you moved to cash, guess what? You are in the driver's seat big time. Okay, so if you want to just sidestep October and you say, I'm a long-term stock investor, I'm not timing this, I'm just riding it up, great. Okay, you can put it right back in your stocks, fine. But if we do end up getting that nasty October and you did get out with the sidestep strategy at the end of September, then you're in the driver's seat. And I'll show you, we'll have a follow-up workshop or webinar here that can tell you what your options are, because you have some very, very attractive options at that point in time. Okay, I want to make that clear. But if you want to keep it simple and say, Mark, I'm not interested in getting fancy here. I want to rely on stocks for the inherent gains they have over time, fine. Okay, no problem. So you can do that. But if you are in the driver's seat, you did get out and you avoided the crash or a huge down move, then I'm here to tell you that you have some very, very powerful, very attractive options on what you can do next. And it could be very, very significant. All right. And we'll go over that in a future webinar. Let me just go forward one more here. Now, I've had a lot of you come to us, interestingly enough, and a lot of our members have said, Mark, you guys need to have a more in-depth workshop on option strategies. I want, you need to talk ETFs. You need to talk more specifics about actual, where do I put my entry? Where do I get my stop? If you want to get fancier, right? If you say, Mark, I don't want this simple strategy. I want to know more. I want to be more proactive. If you want to just take advantage of if you want to take advantage of protecting yourself here, all right, then this is, in my opinion, one of the most effective, basic things you can do, all right? And it's one of those things where you say, Mark, I was expecting something fancy tonight, and I don't want to go down by the river and wash 7 times, right? I'm telling you, it is so simple and it's so effective, all right, that is, at the worst case scenario, remember that the probability favors, I believe from recent years, a down month this year in October, all right, first and foremost. Secondly, let's say you're wrong, okay? Let's say I'm wrong. Let's say October ends up being a good up month. Well, I mean, even then, what are you missing out on? All right, so it's a reward to risk thing. So if you miss out on a little bit of an up month in October, you can always get right back in at the end of October, and you've got to be okay with that. The majority of up months in October were 4% or less. All right, you just had a small handful of them that were greater than that over the last 64 years. Majority of them were not substantial. Some of them were very strong, but you also had some huge down moves as well. All right, so let me go ahead and advance to this. This is what the October sidestep strategy looks like. Just giving you a glimpse of the 87. That's what this looks like from a practical standpoint. You're out at the end of the month, and this assumes a crash. And again, it's not likely, but it's possible. So if you get out in the last day, get flat, move to cash, then if you want, at the end of October, on the close of October, send the orders in to get right back, reestablish your positions. Now, as I tell you this, the one thing I want you to know that you have to be very, very careful about, if you plan to reestablish your position, you need to make darn sure that you don't generate or accidentally trigger a long-term capital gain tax on your portfolio. All right, and I'm going from memory here. I'm going to have a lot more of this tax data collected here for the next workshop, but right now, I'm telling you, talk to your tax advisor. They should know this like the back of their hand. If it's 30 days, if it's 60 days, not a problem. If it's 30 days, you want to make sure that you're not playing with fire. Get back in sooner than that. Make sure you count for weekends as well. Okay, so don't play around with that if you plan to get back in. You do not want to take tax advice from me, first and foremost. And if you plan on reassuming your stock position, you don't want to risk that long-term capital gains trigger for the month of October. Okay, let's take some questions here. Let me go one more slide here. Now, again, a lot of you have asked for a much more in-depth workshop, and we're going to do something here that's very inexpensive. All right, we've made this very cheap for everybody, and I've got 3 speakers. Myself, Thomas Wood, and Dave Aquino are all coming together. We've had a lot of you in the trading room say, Mark, we want more information. We want more sophisticated strategies. I want you to tell me the latest tax, stuff you can gather. Again, we're not tax experts, but talk about a total review of long-term capital gains. Talk about a breakout strategy. Again, what breakout strategy can I use? Talk about ETF protection or low-cost hedges using options. All right, so I've gone to Thomas, I've gone to Dave, and I said, guys, what do you recommend as the best, defensive strategy for the crash? And this is what the course is designed to do. If you want the basic advice, then simply sit out the month like I just told you. That's free, and that's easy. You don't need this workshop if that's good enough for you. Okay. If you want more advanced analysis, as a two-hour workshop, it's going to be on September 23rd. And again, you'll want to go to valuecharts.com/crash here and sign up. And again, I think it'll be very helpful. So as well. But there's a lot of more other sophisticated strategies that we can certainly include here. And I'm going to go ahead and throw this link out here for everybody here. But it's valuecharts.com/crash. Let me go ahead and get to the questions. Okay, let's see. Oh, yeah, Jerry, thank you. Appreciate that. Okay, John, you're asking wash sales, maybe. Yeah, wash sales may be a concern in and out of within the 30 days. Yeah, John, getting a little beyond the scope of tonight, but yeah, exactly right. So easy way, wash rule, exactly, 30 days, Linda. Yep. So a lot of you are familiar with that. That's good to know. What do you think about the midterm election impact? Rick, that's a really good question. Now, that's a really good question. That introduces that element, a kind of uncertainty there of what could happen. Yeah, that's really interesting. You've got that catalyst there that could go one way or the other, you know, to really impact what happens in October. So yeah, Rick, that's right on the mark. What happens there could actually end up really spelling what happens in October as well. Covered call and buy put options. Abe, absolutely. Yeah, if you're familiar with how to do that, then that can be very effective. The thing you want to be careful about is that sometimes the option prices are they're going to be elevated possibly in the month of October, so you want to make sure you've got that timing element there too. A tax loss strategy in October and November. Yeah, Rodney, that's certainly possible too, and that's something that we can address as well in the workshop. Okay, okay, forward downs. Okay, why you're not okay? Why not hedge for the downside? You can. We didn't go over that tonight. I'm going over the very basic thing you can do, and trust me, some of the most effective trades that I've had over my career have been really simple ones. You know, and this sidestep strategy is very simple, right? Callers, yeah, Sam, you're more advanced than a lot of the folks here tonight, but you can use callers as well. Now, those can be expensive, especially in October. So you want to make sure that the protection there justifies the cost. I've seen some insanely expensive callers before, I guess, depending on what you're trying to accomplish there. Why does it take place in October? Well, just because, good question. I don't know if it started in that crash of 29, but there's been the stigma about October, and it's mostly psychological. So if you start to see that, you know, the bad things happen in the first part of October and things start to accelerate, then you get to, you know, that's where the fireworks happens. And it really probably happens because most people have their eyes on October, you know. So if you start to get, you know, a lot of fireworks happening there, then you start to see, you know, some crazy things happening. So again, for those of you who want to join us in the crash course, come to valuecharts.com/crash. Let me catch some more questions here. Okay. Connie, wash rule has to do with capital gains as well, and we'll go over that in more detail. And I want to review that, and I'm going to have to plead ignorance here. It's been a while. I used to know that very much more in depth now, and I'm almost afraid to quote tax law until I can get on the IRS website and make sure that I'm at least saying what I believe to be pretty up to date. So forgive me for that, for not knowing more about that at this point. I've just been buried with a bunch of other stuff, and I want to make sure that something hasn't snuck in there to you know, to change that's changed that before I speak on that. Okay, isn't one reason why October is often down because mutual funds need to close positions by October 31st for tax-related reasons, so they may sell for losses, driving the market? John, I don't know. I don't know if that has that's a catalyst or not, but it certainly could be. Yeah, certainly could be. Which sector of stocks would be affected? I would say that it's a good question. I would say that you know, it almost begs to have a little bit of a historical study on some of the different sectors out there. I'd say one of the safer sectors could possibly be utilities. But let me tell you the thing I've noticed with hedge funds over the past 5 to 10 years, and that is, you know, 20 years ago, there used to be more of a flight to quality with gold and things like that. And I can tell you over the past 10 years or so, as a hedge fund manager, we've seen days where stock markets come under pressure and everything is getting hammered. And part of the reason for that is because they're rebalancing in real time, and they're dumping, you know, positions in cotton, as strange as it sounds, or coffee, you know, unrelated markets. And the commodities sometimes get drugged down as well badly. And you would think gold would serve as a flight to quality, and it used to in some occasions. Sometimes lately it seems like gold's been hammered along with the falling market. So Lynn, to answer your questions about which sector, that's a little bit of a mind bender. And the reason why I say that is because it's not. There are some sectors that are safer than others. There's no doubt about that. but a lot of it has to do with allocations and rebalancing in real time. So biotechs could get hammered if this thing goes down, potentially. Okay, funds start adjusting in October, so coming to the end of the year, they look good. Yeah, exactly. That's Rodney. It's exactly right. So they want to start the window dressing in the fourth quarter. So, yeah, Abe, if you're talking about, also, you reminded me of something, that there are some, for those of you who, just a little bit of advice here too, if you're interested in looking at some ETFs, there are some downside protection ETFs as well that can give you, 1x, 3x protection as well. But for the purpose of this workshop or this webinar tonight, let's just keep simple. If you're legitimately concerned about a nasty October and you don't want to risk it, hey, just step aside. Just unload, put it in cash, and sleep like a baby for the month, and realize you could miss a few percent to the upside. But you know what? Just with the weekly momentum, I would be really surprised if you missed out on a big up month in October. All right, now stranger things have happened. That's a risk you take. It could be a big up month, and that's why I would recommend watching the 1 or 2 week break. If it breaks below the first week, that's a red flag. Watch what it does very carefully. If it starts to pick up steam, you could be looking at October being a nasty month. Watch for a higher low the second week, and then watch for the third week to break that second week low. That's a traditional red flag too, and I can promise you a lot of the big hedge funds out there are watching for that. So, all right, we are going to try to keep it within an hour tonight. Again, love to see you folks out there, and we're going to give you triple the value here with Thomas coming in, with Dave Aquino, Thomas Wood. For those of you who are in their live trading rooms every day, these guys are very good at what they do. They're going to show you and talk to you about what they would recommend, a little higher level things for how you can protect, how you can possibly include some strategic ETFs. Dave Aquino is going to talk about low cost option hedge strategies and some spreads as well that you might want to consider if you're inclined to do that. Again, my advice for those of you who just want the simple strategy, hey, just go and sit out October, right? Okay, for October 12 slide, you simply held pat. By January, less than 3 months later, you actually in new profits. Yeah. And besides a little sleep, you were only stocks, you lost nothing. Yeah. So you're talking about for October 2012 slide. Yeah. So yeah, Arthur, if you're referring to, in fact, let me see if I can pull throw my TradeStation up here and see what you're referring to here. Okay. Hopefully everybody can see TradeStation now. Let me. In fact, for those of you who are still wanting that link down there, I'll leave that down there. That's valuecharts.com/crash. Let's forward to October of 2012, and see if we've got that. That's 99. Let me throw up a weekly here. So, okay, so going back to 2012 right here, yeah, you get the pressure here. It does have that correction, right? So if you were to do the sidestep strategy, you're out literally in the Dow at 13,437. You're buying it back at 13,093. So save yourself a few percent, and then it goes down more, right? So you have a little bit more of a continuation in November, but by January you're up at new highs. So that's the thought process here of only sidestepping for 1 month. I haven't I don't have the concern for November and December that I have for October. It's not to say that nothing bad can happen those months, because it can, but October with the elections and everything, that's the big month of uncertainty that I'm a little bit nervous about. Here's that other scenario in 2013 I told you about, where you have that let me put a horizontal line here. Notice your October sold off, broke the low of the first week, and then went below the low in September, right? That's at 14,756. Notice the tip of your second week in 2013 barely went below that, and then came back up, met with strong buying. That is a huge clue. Okay, so watch for that. Very, very good clue right there that the buyers are still in control, and that could be something that would motivate you to do something. But again, if you took the sidestep strategy, you're out at 15,258. You're back in at 15,615. So out a few percent on the upside, but you slept peacefully during October. You didn't worry about it. So to me, worth looking at. Okay, let's see. Recorded version will be out here of this. Okay, recorded version of the workshop will be available probably within a day or two after. Tonight's is recorded as well. We'll have that up hopefully by tomorrow. Were you following the Dow Jones Industrial Average for your analogy? Yeah, Eddie, the reason why I'm using the Dow tonight is obviously there's a high correlation between the indices, but I have 100 years of history in the Dow. So I wanted to go back to 29 and the early 1900s. I was able to get that history on the Dow. That well, I just I might be able to get an S&P 500. Happen to have it for the Dow. There's a high correlation, so it's yeah. Okay, QE3 potential end to QE3 also a problem. Andy, it's a huge problem. Yeah, no doubt about that. So quantitative easing, the end of that, elections, and I don't know if I'm assuming most traders I run into are very intelligent people. They follow politics, they follow monetary policy and things like that. And if you're following all that stuff, you're looking at our government, wondering what the heck's going on because they're spending like crazy up there, and going to government employees going to nicer hotels in Las Vegas than I go to. When I go on vacation. Not that I'm anything special, but I'd like to think that it's amazing. I actually saw a study out that said, and I'm going from memory here, which is always very dangerous, but I thought it said that there were 75,000 government employees that made more than the average governor. All right, it's just, if that's true, which I think it actually probably is, then a lot of spending's going on up there, and there's gonna be a time to pay the fiddler with all that, and we need to be ready for that. All right. Okay, so that's pretty much it. So if you're interested in the sidestep strategy, it's like the story of going down and washing on the river. It's simple. You can find that cash at the end of October. Now the wash rule or the long-term capital gains, you've got to be educated. So talk to your tax advisor about that. Make sure you're educated on that. I am not a tax advisor, and I don't want to lead you down the wrong path there. I'm just telling you from a trading perspective what I'd recommend doing, but you don't want to mess yourself up and put yourself in a position where it's going to generate capital gains for yourself when you don't have to do that. I'm pretty sure you're okay, but don't listen to me from a tax standpoint. Make sure you go and just double check with your tax advisor. Tell them I've got some positions on longer term, and I'm interested in going to cash. Now, if your account's an IRA account, and you have it, at your custodian, then you don't have to worry about that so much. You can do whatever you want in the IRA account. But still, I would just verify it. Whatever plan you want to do, if you want to use the sidestep strategy, just verify it with your tax expert. Say, here's what I want to do. Are there any tax implications for doing this? And they should be able to assure you that you're good. Okay, a couple more comments here. Yeah, spending like drunken sailors, absolutely. Rodney, crazy stuff there. That's true. Yeah, get rid of the bloated government. Thank you. It'd be great. Actually, I'd love to get rid of the IRS too. I think it sounds extreme, but it would simplify things. Just everybody pay a flat tax, sales tax or something, national sales tax. Geopolitical events worry me. They should. We've got ISIS overseas. We've got a lot of things coming ahead here. The election's coming up. So a lot of things out there could cause some fireworks, and we have slowing momentum on the upside and as well. In fact, I need to do we did this early in the year where we had a VIX option strategy, and we were able to catch the stock market literally almost to the day before it got hammered for a few days. And those who bought the VIX options did really well. There may be a VIX option strategy in here as well for those of you who want to play to the downside. So we may have to have a workshop or webinar on that as well. Yeah, Kevin, second the motion. Mark, you could bring a real tax advisor. Yeah, Julie, that's not a bad idea. Yeah, that's not a bad idea. So let me see what I can do on that. I don't know. My accountant, those guys work 9 to 5, and I'm not slamming any accountants who are on here tonight, but my guys are except for tax season, then it's like 4 in the morning till 1 in the morning. But those guys are. I'll see if I can get my tax accountant to work in a late evening. I don't know if it's possible or not. Okay, I can be just as careless with my money in an IRA, yeah, as the IRS says, yeah. Okay, I know. Let's see, a good one, Savannah. Oh, a good tax person, Liz. Yep. Well, our guy should be able to advise us on that. I'll see if I can get some advice, and maybe he can pop on and answer a few questions. Okay, you did well in the VIX play. Another would be great. Great job, Mark. So glad to hear that. So yeah, let's take a look at the options and see if you know what strategies are out there. Now, let me just say this: this workshop is more for a protection. It's more for from that angle. We have a lot of people asking for, hey, you know, great. Tell me how I can make money if this thing unfolds. So, what strategies can we use to actually play offense in October if things fall apart? And again, I told you my biggest month in recent years in the hedge fund. We made millions of dollars in October of 2008. I mean, this is raining money. It was a wonderful month for us. Again, we're not happy that other people don't do well or that the market gets hit, but we just happened to be on the right side of all the moves in that month, and it was a very positive month for us. So I'll try to talk about some of the things that we used back then in terms of strategies, and then what you can use, you know, as a retail trader as well. Let's see. Teach you how to. Okay. Is it a good workshop to teach you how to hedge? Yeah, we're going to, Janet, some people want to do that. So some people want to learn how to hedge positions. I know people who refuse to dump some stocks. Could be sentimental, and that's certainly a personal choice they've got. If that's the case, then you know, then we can talk about hedging strategies. And there's different things you can do with a lot of the options out there as well. Some of the leverage ETFs have low, let's see, IV options. So just doing straddle can be a good strategy. Rodney, yeah, in fact, you bring up a good point, and that is Dave Aquino is going to talk about some spread strategies as well, you know, for protection, also for offense in a future one. Thank you, Mark. This goes back to protecting your capital. Yeah, this does, Lee. You've got to protect your capital, and many of you have, you know, savings or stocks you hold for the long term that aren't part of your trading strategies per se. You want to make sure you protect those. You don't want to play games with that. And the sidestep strategy, to me, if you're okay with potentially missing out on a few up percentages or up percents, you can look for the warning signs though. Break of the first week low, break of the second week low. You know, those are, every single crash that's happened has been in one of those two camps. So if you don't break any of the lows of October, then you know it could be a very good month. So you could wait for that. If you want to be ultra conservative, get out the last day into cash, you know, last day of September, and just be okay with it. If you miss out, and you're protected. So, okay, ID, you buy VIX early in October. Yeah, you could, Jerry, certainly do that. I would be looking to combine that with some timing. So, yep, combine that with some timing, and I promise you, if this thing starts getting rocky to the downside, we're going to have a lot of cool strategies we can take advantage on the downside. There's some really cool stuff we can do. Okay, was not here earlier. Do you do stock swing trades all the time, James? If you are in the valuecharts.com membership, then you see it every day. So we do tons of swing trades. And we're going to be looking at October. Going into October, we're going to be looking at the live trading rooms. We're going to be looking at strategies to take advantage of put options or even short positions on the downside or upside. Yeah, but we're seeing a lot more on the downside lately. I know we've been bearish Apple coming in the last couple of days. I didn't look at where it ended up today, but I think it sold off a little bit earlier. But major momentum warning signs on that, and a bunch of other stocks breaking down through key support. You know, a lot of them we've been following lately. So most of our sell signals, or most of our signals lately, I think have been sell signals or going long put options. Do bonds go down in October as well? No, Vin, typically bonds are going to probably be a flight to quality instrument. So if we see a rocky October, I expect bonds to actually go up. But I can tell you right now, Jerry, good seeing you. Thanks for coming. I can tell you that bonds are toxic, in my opinion, longer term. I mean, we're printing them, but can we pay them back? So I don't know how long they'll be a flight to quality, but they've been recently. So I assume that if I know in 2008 we made a lot of money in the upside of bonds. So bonds took off for us all the way well into November as well. So if we do get fireworks, then you can look at possibly taking advantage of bonds as well. So in fact, let me see. I can look at U.S. Treasury bonds here. Actually, see, throw up a weekly chart and maybe even a monthly. Yeah, so they're making higher. You know, momentum's positive. The monthlies and bonds are a little bit concerning to me. We had that great a great setup here It was a no return setup. This is all the way back in April and May. So that was really nice on the longer term 30s. But they've been creeping up for the last couple of months. But yeah, right now I'd say that you want to be careful watching out for those as well. But if we do get any type of crash in October, I'm guessing bonds are going to benefit from that. Okay, would you be having a follow-up in the end of? Yeah, certainly, Lee. We can do a follow-up on this as well, and even on the paid workshop as a just around, especially if we see fireworks. If we don't see fireworks in October, then I don't know if there's much to follow up on at that point. But we'll have all sorts of other cool strategies heading into the fourth quarter that we'll be talking about. But specifically relating to fireworks in October. And the election results coming in the fourth quarter, we are definitely going to be tracking that. So stay tuned for that. Bonds are topping with each swing, being smaller than the prior swing. Another distance between support and resistance levels narrowing. Yeah, that I was looking at that too, Rodney, on mine. If you look at condense your chart, we're coming right up. I'm willing to bet that we're probably right up on this trend line here. All right, maybe even through it slightly, yeah. So there's this trend line connecting these. Let me put it in snap mode here. Okay, I don't know if we broke that. So yeah, by a little bit, but we still have the support or resistance levels, excuse me, right above there. So resistance levels above there, broke that down trend line a little bit, but still looks like momentum on the monthlies at least is a little bit slowing to the upside. So, excuse me. Okay, well, listen, folks. I hope to see you at the crash course coming up on the 23rd. Let me throw that up here again for those of you who didn't see that. September 23rd, Tuesday, 7 to 9 p.m. And each speaker is going to have 30 minutes. We're going to do Q&A at the end for 30 minutes. So you're going to hear a lot of different strategies on how to protect what you've got if you want to get fancier. If you want more, hard data on capital gains, more hard data on breakout strategies, ETFs, more information on that, hedging with options, and also some possible spreads you may want to consider. This is a total preparation package for October, and if we do see fireworks with everything that's happening around the world right now, we've got ISIS, we've got the elections, a lot of things going on. So we're going to prepare for anything that can possibly happen that could bring us a lot of volatility in October. So we look forward to seeing you there again. That's September 23rd, and that is recorded. If you can't make that, then you can access the recording later on. But we hope to see you there. I think it's going to be a great session. We've kept the price down too, okay? So this is a couple tanks of gas in your SUV, and I think you'll be, you'll benefit from this. So we certainly expect that. Okay, well, Lee, thank you as well, Rodney and Kurt, and a lot of you folks here tonight. Great to see you. Hossein, I'm hoping I'm pronouncing that right. Good to see you as well. Kurt, yeah, see you there. Good. I'm glad you signed up for that, and thanks for attending. We're looking forward to it. And Rodney and everybody else here tonight, Janet and Liz and Kevin. So Eddie, yeah. Yeah, Eddie, thank you. But yeah, appreciate it, and thanks for coming tonight. Again, if you want the simple strategy, just do the side step and you're done. All right. If you want more information, you want more strategies, you want more information on capital gains and more specifics, again, we'll have that prepared for this next workshop, and we'll include some information also about ETFs and option strategies as well. Richard, Eddie, Rodney, everybody, thank you so much. I'm going to go ahead and shut her down for tonight. Enjoy your evenings, and look forward to seeing you, all of our members, tomorrow in live trading rooms. So have a great evening.